you can only control certain moments of it. And it's those pieces that you control that you will actually remember.
The Phil Bach Podcast. Investing, economics, entrepreneurship.
I thought we were doing it.
All the good stuff comes before and after you hit record.
Damn it.
All right. My guest is Dave Abner. David is the president of Dabner Capital Markets. David is a world-leading ETF expert. He's the author of the ETF Handbook. He's the author of the Visual Guide to ETFs. Dave created the ETF implied liquidity function, which is available on Bloomberg, which I love, which is the best way to figure out the true liquidity, not the ADV or AUM, but the real liquidity of an underlying ETF. Dave was previously CEO of WisdomTree Europe, and now with Dabner Capital Partners, a boutique advisory firm. He's working on projects with the World Bank and asset managers around the world on incorporating cryptocurrency and blockchain technologies into their business models. Dave, thanks for coming on the podcast.
Hi, Phil. Thanks for having me. It's great to be here.
And I should add, of course, David is a longtime friend, an old friend. And do you remember how we met?
No, I don't remember how we met. Do you?
I do, yeah. So this goes back. This has got to be 06 or 07. I was super green in the industry, brand new. And I was at an ETF startup back then. And we had this big idea to do a VIX ETF. You know, it had never been done before. And you were a market maker with, who was it? Not LaBranche. Who were you with it? Do you remember?
In 2006, I was finishing up at Bear. So in January 2006, I left Bear and I joined BNP Paribas. So
BNP Paribas, that was it. That was where it was. Yep.
Yeah.
And we're looking for help from market makers to see if they could price VIX in real time so that they can make a market into, you know, what we hope would be an ETF or an ETN. We're working on different ways. And he said to us, he said, well, why don't you just track VIX futures? And we're like, nah, come on. It only tracks like 70, 80%. Correlation's not there. It'll never fly. And of course, it worked out very nicely for neither of us, but for other people that worked on it. But so that's a ways that we go back. And you know, wow. You've been in the ETF industry, as have I, for, you know, all this time. But I think one of the things that in our conversations and in following your career is you're not really limited to ETFs. You really have a broad view of the wealth management and the asset management industries and the different trends. And I want to talk about some of the trends that we're seeing right now and, you know, where the puck is headed. And, you know, with that, one of the topics that we've been talking about a lot are digital assets and how they're merging with existing tools in wealth management. And I want to kick it off there. I mean, tell me what you're seeing as the overarching thesis and how digital assets, what that means and how they're merging into traditional tools.
Digital assets it's an interesting place to start, right? Because you talk about how we were both in ETFs together and that I've been doing a lot of things in wealth management. I actually came out of closed-end funds in the early 90s, right? So I've been involved in sort of packaged products for investors for 25, 27 years already. And now I'm spending more and more of my time looking at digital assets. You're right. And I actually call them digitized assets as opposed to digital assets. I think there's an interesting distinction there that I try and make, right? Like I think of Bitcoin as a digital asset. Okay. It is something that you can buy and sell like an asset, and you can buy and sell it and trade it in the hopes of profiting one way or the other, whichever way you think it's going to move, right? And Bitcoin doesn't exist in the real world. It's really only a series of, you know, zeros and ones. So it's completely digital, right? Nobody can actually give you a Bitcoin or anything like that, right? You can move Bitcoin around from addresses, but it is only the recording of transactions and nothing more. Whereas digitized assets is the way I think about it, is the evolution of the technology that drives the financial system. So when I think about that, I think if you look at traditional securities even, they used to be, you would buy a stock and a few days later in the mail, you would get a stock certificate. And then we went to a system where, you know, there was an electronic register, which is the way people own securities now. If you have a Schwab account and you buy a security, it shows up in your account. And I think that's a form of digitization. And I think that the next evolution of that, this further digitization of assets, is happening on a platform that we all refer to in a variety of different ways as blockchains, right? And these are the easiest way to think about them is electronic registers of transactions. And what makes them interesting is that it's not going to be just the digitization of our current securities markets, the way we think about them now. And what happens is when you use blockchains, it becomes more efficient, right? So you get rid of transfer agents. You get to rethink custody and things like that. So everything is moving towards a more streamlined process, which will lead to things like shorter settlement cycles, lower fees, right? If you're an asset manager and you are living in a world where you have to launch new ETFs at between 0 and 5 basis points, the only way that you can think about making money is by driving greater efficiencies in your infrastructure. And I think that is one of the things that's going to be leading this sort of digitization of assets, right? Moving everything onto the blockchain for speed and efficiency.
Does that
long answer, short question? Sorry.
Well, doesn't that bring in other systemic, risks or outside? I mean, look, when you look at how stocks and ETFs are settled and cleared. You look at the DTCC and that whole process is already very efficient and very inexpensive. Is there enough there? Is there enough fat to cut to make it worthwhile? And are things? I mean, we're talking about so much money being transacted through the existing pipes. Is it almost too risky to make any changes?
I think, it's funny, right? You talk about, is it too risky to make changes? And I think it's a funny time to say something like that, right? I look at business today, right? We're in the midst of COVID-19 pandemic, and everyone you and I know have been working from home for about 7 weeks. And most of us, if you look back 10 weeks ago, would have been told by our companies that there's no way, we don't have the infrastructure or the technology for you to work from home, even though you think you may be more efficient. And now we're all there, right? So I think companies always want to say that things are being done as well as they possibly can, and there are no efficiencies to be had to justify the expenses of getting there until challengers come along and they do it better, right? And they bring out something that's markedly different, or I think until they're forced to do it, right? So if I look at the world now, the world of financial instruments, there's basically an entire secondary financial system being built alongside the traditional financial system, right? The digital assets or trading mechanisms look exactly like the traditional systems, but they work very differently, right? They have instantaneous settlement and clearing and execution, right? There's no T+2 settlement, right? Of course, everything is pre-funded, so it's a little bit different, but things move faster, things will move more efficiently. What I'm playing is I think there's going to be a convergence between traditional financial systems and digital financial systems. And I do think there is enough there. I think it's huge, right? You're talking about the settlement and clearing systems for the entire financial system. And then you're talking about the ability to digitize assets that couldn't have been done in the way we do things now, right? So if I look at the ETF world, we're looking at the bond markets from an ETF perspective, and we're saying, oh my God, the traditional bond markets don't work well, period, but they definitely don't work well in a world dominated by ETF trading, right? And that's, we could talk about the movements in fixed income ETFs and what happened there, right? But really, we're seeing that the bond market is archaic. Digitize the way bonds trade, take the next leap on that, and it will fix that whole system. And then you can take it even further, right? Think about real estate tokenization and a whole variety of new asset classes that could be traded in an efficient manner. And I think it's a very exciting prospect.
You look back over the last maybe 5 to 10 years, and you look at what happened with Robo advisors, and there was, the idea that, well, asset allocation could be done, could be automated. The account opening and funding process can all be automated. And there was tremendous amount of growth and expectations on the robo advisors. And then the counter to that was, well, traditional financial advisors provide counseling, they provide financial planning, they hold your hand, they help you in other, more human, intangible ways. And you look back at the growth and you could say that the financial advisor model, the traditional model, has won. It's been more effective than the robo-advisor model, at least in recent years, when you compare, the cost of client acquisition and, where the assets still are. Is that just the nature of wealth management is such that people are going to be reluctant not to have a human interaction, not to put a face to the service? Or, do you think it's just a blip, the shortest line between 2 points is a straight line, right? What was that expression that, but it's never a straight line, and that, we will end up there?
Well, there's a lot to unpack in that question. So I'm going to start at the beginning where you started talking about robo-advisors and then try and work my way through. So beyond, what I do on my day-to-day in terms of consulting and advising clients on a variety of different things, we do some investments, like some venture investments in small startups, right? Generally at the seed stage level. So if I go back to 2009, I made my first investment into Betterment Advisors, right? So I was a Series A and Series B investor into Betterment. And I met the team very early on. And in 2009, what they were building was absolutely revolutionary, okay? There was no robo-advisor really that stood out. They were blazing a trail in helping investors to automate and understand the investment process. Fast forward 10 years later, and the advisors that you say have won, I don't know if they've won, but what they've done is all of them have adopted a system of automated asset allocation and account management, right? If you're an advisor today and you look back at how your business was 10 years ago, you maybe were manually adjusting thousands of accounts, and it was a ridiculously manual system to provide asset allocations and management for your clients. And today, it's all done via the systems that firms like Betterment and Wealthfront pioneered. Now, I think a little bit about what you're talking about in terms of referencing them as robo-advisors is thinking of them as standalone businesses. And I don't necessarily think that they are, right? I think there's more to it than the automation of the asset allocation and investment process. And that's an important piece of a bigger business, right? So the real growth in that business has taken place at the big firms like Schwab and Vanguard and among advisors, and they're not called robo-advisors there, right? They're technological tools to help manage people's investments. That's what they do. And I think that business is changing, right? The advisor business is changing dramatically. I think, again, going back to where we stand today, COVID-19 is going to have a dramatic influence on how the advisory business changes over time. I think that people are not really looking to be coached, or I don't think they want to pay a lot of money to be coached on their behavior. That's not what they thought they were using advisors for. And I think that's a selling point of advisors now, because the investment aspect of it has gotten more difficult to say, you pay me 1% for me to set up your asset allocation model, right? Because there are so many automated systems that could do it for a lot cheaper. So they pivoted into this concept of charging people to be there as a coach. And what I think is that that's not what investors are looking for. What they really want, what investors really want, is actually not even out yet. I actually think that most people do not even really want to be investors, right? They want a holistic money management process where they go and do their job or whatever it is they're doing to make a living. And that kicks off some income that goes into a series of accounts. That series of accounts monitors their activity, right? It watches their credit cards, it understands their activities, and it allocates different portions of that income into different buckets. It does it all automatically for them. It moves the money out. it rebalances it, and it maintains it so that people can live without having to be, if you think about what people's jobs are, right? If I'm a teacher, I don't want to also have to be an investor and a money manager. That's not really what I want. What I really want is to focus on educating the children that I teach. And what I would love is my money to be managed in a way where I don't have to wake up and be coached because I didn't understand the risk I was taking in my portfolio, and my 401k is now a 201k because the markets are down 30%. That's what I think is missing, and that's what I think is the holy grail of advisory of the future.
Do you see that as where the ball is headed? So, I mean, just to bring it all the way back to the capital markets and, where stocks are trading. And there's this, great Ben Hunt quote about how, the goal here by the government essentially is to turn the capital markets into a public utility or a political utility, and to, manage away through the central banks, to manage away any volatility and to provide slow and steady returns as if it's a God-given right. And that allows people more and more, something that we were talking about earlier, that allows people more and more to invest in cheap beta and just get access to the markets without having to really understand the companies that they're investing, without having to fight for alpha, without having to pick active managers that are trying to, use strategies to get outperformance of the market. It all kind of ties together. Is that a fair, holistic view of where you think things are headed?
Look, I think when rates were 8%, there was much less participation in the equity markets, right? And that's an explanation in itself. Generally, I think, look, there's a large amount of people that are, do-it-yourself investors or traders or things like that. But I mean, I say it's a large amount of people. It's a big absolute number, but as a percentage of people, it's probably very small. And in general, people don't want to have to worry about this stuff. They don't want to. I look at my books, right? My books take complicated subjects and they try and explain it in a way that anybody can understand the material. And even then, most people don't want to have two jobs. They don't want to have one job doing whatever it is they do and one job managing their money or understanding what their financial advisors are trying to tell them and making decisions. The biggest problem, I think, is one of the first questions that any advisor asks an investor is, tell me about your risk tolerance. And the question is just absolutely wrong. Investors and people have no idea how to answer the question, what is my risk tolerance, right? Some people will say, oh, I'm conservative. I don't like to take a lot of risk. But then if you looked at their credit card statement, they were just, backcountry skiing in Colorado, and they were shark cage diving in South Africa. And you look at them and you're saying, well, wait a minute, you really don't seem as conservative as you're telling me. I think you could stomach more risk. But generally, the problem happens the other way around, right? Yeah, I can handle some risk. I've read it all and I've seen it all before, no problem. And then you call them up. So you put them as, able to handle risk, aggressive or more moderate. And then you call them up and you say you're down 20%. And they're ready to jump off the ledge because they really weren't ready for that kind of risk. It starts with, that's the wrong question for investors. And a lot of the automated systems do this in a very good way, right? They use behavioral finance and they produce questionnaires to understand what somebody's risk tolerance may be without ever asking them what is their risk profile, right? Because that's the way you have to do it, right? Look at your behavior and let me tell you, and look at your goals and where do you want to be? Where are you now? What are you trying to get to? Where do you want to be? And let me tell you what risk would be appropriate for what you're trying to do. And if you can get everybody on board with that, right? And it seems like we always read about the stories where people may have been trying to do that and then they were scammed in one way or another, right? That becomes news. But really, I think that's what people are looking for. They don't want to have to spend their time managing their money.
When you look to this process of jobs and processes in the financial services industry turning into software and automation, and it's happened, it's continuing, where do people who are, smart, ambitious, accomplished people with good pedigrees in the industry, as these jobs go away, where do they go? Where's the opportunity? Where's the capital, the labor intensive opportunities in this industry to put good people to work?
there's a lot of people that are always concerned that jobs are going away, and I actually don't think of that as the case. I think jobs are evolving. Yeah, I mean, I worked on trading desks and equity salespeople. That job has basically gone away, and luckily, I saw that happening early, and I was able to change sort of my career trajectory. And a lot of those people that I knew that were equity sales traders struggled. So that job may have gone away, right? And a lot of these jobs will go away. But what happens is it leads to other jobs growing, right? Like we think about, systems engineers and architects, and you don't hear a lot about people coming out of terrific universities right now. Wall Street used to be the place they wanted to go. Now it's not, right? They want to go to the tech firms. They want to go to the big four. That's an evolution of jobs. It's not that the jobs have gone away. It's just that they've changed, and what your smart people are doing is evolving over time. And I think in the financial services, that will change as well, right? So advisors have evolved. I think they've gone from being stock pickers to asset allocators to what they call as advisors, coaches, right? Behavioral coaches. And then I think the next thing will be life planners, and that's evolving as well. You talked about Ben Hunt, and they do a lot more in terms of holistic planning and thinking about clients' lives than ever before. And I think that's the way that the business is evolving for the smart people in financial services.
Yep, and you can see that happening already. I want to talk a little bit about ETFs. I just want to touch on a couple things. I don't want to do too much, but you are truly, one of the world's experts in market structure and ETF liquidity. Of course, we talked about the implied liquidity metric that you came up with. Well, it just so happens that a month ago we had a major break in ETF liquidity into fixed income ETFs. Can you tell us a little bit about what happened there, and how people should look at it as a systemic risk or a risk on a going forward basis?
Sure. So I would start by saying I didn't think it was a break in liquidity in fixed income ETFs. I think it was a highlight of the problem in the underlying liquidity in the underlying assets. And actually, you mentioned the implied liquidity feature, right? Which it works great for equity ETFs because equities trade on exchange, they have volumes, you can assess trading characteristics of equities. Fixed income, not so much, right? Almost impossible to tell how many bonds have traded, what's available, what the markets look like, right? There have been some advances in fixed income, the use of trace, but really it's an incredibly opaque market. It's an incredibly archaic market. And what you saw with fixed income ETFs just recently is that the fixed income ETFs or ETFs in general are, especially during times of market turmoil, they increase in volume as a percent of overall market volume, right? So ETFs during the high volatility periods traded, sometimes 30 to 40% of the market overall. And people are using ETFs as a real-time pricing mechanism because that's what they are, right? If it's a fixed income ETF or an equity ETF, I can go to the market, I can buy or sell that ETF, and I know instantly where I've bought and sold it, what the value is, right? What I've sold for, what I bought for. That's what ETFs do. And what you saw was that market makers in fixed income ETFs have to sort of make an assessment of where they think they can trade the actual bonds. And the bond market is so hard and so opaque that there was a disconnect between where it looked like the bonds were valued, or what the old sort of 1 day old NAV of the fixed income ETF was showing, and where the pricing of the bond ETF was at any given time in the market. And during this period in particular, that was exacerbated because the bond market was so locked up. Again, people always comment about the ETF market. Did the ETFs cause a problem? But really, the ETFs are so small compared to fixed income mutual funds today, still. Even though there's $1 trillion in fixed income ETFs, it's probably, I think, the fixed income mutual fund markets maybe 10 times that at least. There was so much activity taking place by fixed income managers, right? Managers of fixed income mutual funds trying to position in bonds one way or the other, that market just basically seized up. And the good thing about today's investing world is that actually fixed income ETFs were still able to provide to investors a real-time price on that product when they couldn't even get real pricing from the bond markets themselves.
So, here we sit. We have to address, of course, COVID, and we've talked about, some of the future, the digitization of the industry as a whole, and where it's going as a trend. This is a pivotal point, and we're going to look back and we're going to say, oh, wow, everything did go back to normal. A year or two from now, we'll say, wow, the world did go back to normal, except for, this or that, except for, do you remember when we used to have middle seats on airplanes? Hopefully, they get rid of those, except for, do you remember when work from home was taboo and now it's the norm, right? There's certain trends that are going to come out of this crisis that will forever change things within the wonkiness of our industry and market structure and asset and wealth management. What are some of those trends that, we haven't yet talked about?
Actually, I don't think we go back to normal. I don't actually like that. I think we have what's called a new normal that evolves over time, right? And I look at, if you went to an airport, I was in, I don't know, 5 airports in February doing a bunch of traveling. And through every airport, I went through the tedious process of going through security and taking my shoes off and doing all that stuff. That never happened pre-2001. And it's the new normal as a reaction to 9/11. And I think there are things like, when I expect to go to an airport in a few weeks to get from London to New York to move home, and I expect that somebody's going to take my temperature in the airport or on the way or entering the building or something, right? That's the new normal, and that's the way things will be going forward. So I think there are going to be things like that which happen. And those will become the new normal. It won't go back to the way it was. Things will be generally similar to the way they were. I'll still go to the airport. I'll still fly on planes, but maybe people will take my temperature. Maybe I'll wear a mask on planes. It's not exactly clear how that. There's going to be a new normal anyway. But I think some things will change dramatically. And it's sort of, in my view, it's things have been moving in this direction, and COVID-19 has accelerated that and will solidify the movement in that, right? So I think work from home is one of those things. I've spent the last 10 years at WisdomTree, and we had a very, very flexible work from home policy. And we also were very used to distributed sales forces, right? So our sales force was all over the country and all over the world, actually. And leadership was very good at understanding what was going on, right? And we developed a management process for distributed workforce. Many, many companies did not, right? Even though the technology existed to be able to do that well. And now they were forced into it. So I don't actually think we go back to normal in business where everybody goes to an office every day at the same time from 9 to 5 and they do their thing. I think work from home is huge for people. You get a lot more freedom. You can design the most efficient schedule for you. It's a huge win for people in general in terms of motivation, health, productivity, right? Now, it's not easy, right? I still know a lot of generally older managers. A lot of the way they manage is what I call the walking around method. And I'm sure I didn't make that up. That's, it's a general thing. They walk around office to office of their other senior managers, and they take people's temperature for what's going on in the business. It's a very, very low-tech way of managing businesses. And I've spoken to a bunch of people recently who are struggling during this moment, saying, it's very hard for me to manage the business now because everybody's working from home. I spoke to one guy and he's like, I used to be able to see my employees every day. Now I call everybody in my firm every single day and try to talk to them. That does not sound very productive or efficient for either the manager or the employee, right? But on the other side, there are a lot of firms that were already embracing technology and developing ways to manage distributed workforces, and they're doing tremendously, right? And they look at this as not a blip at all in their operating procedures. And the firms that can do that well and survive in this will do better. that's not going back to normal, right? I know myself, I would love whatever my next engagement is to continue to be work from home. I've been working from home for the last 6 months since I left WisdomTree, and I love it. It's just a great balance. I'm able to do a lot more. I'm productive. I know myself, I'm productive. I've carved out a place in my house where I can be productive. People understand it, but it's definitely something people have to evolve into, right? It doesn't happen immediately overnight and work perfectly. I know in my house, I have an office, but even now, like everybody in my house is home because of school and my wife is home, and everybody likes to just walk into my office at any given time and ask me questions or look over my shoulder at my computer. And it's going to take time for people to understand that, this is a workspace or this is a work time and things like that. So that's actually one thing which I think is not going back to what we call normal. And I think people will have to deal with it. I think that's going to change the whole office real estate environment and things like that. Like my house is like a WeWork right now. It's got people are doing, my kids are in all their bedrooms, they're doing their schoolwork. And then at any given time, they could be downstairs playing ping pong or watching TV or eating lunch, right? They get down to the kitchen, they grab something. It's literally like, this is a WeWork. And actually that works during this moment for us. We're very lucky we have space, but that's the kind of environment that people are going to want to try and recreate. And actually, I think it will change real estate. It will change office development and commercial real estate and things like that. So that's going to be big. I think two more things that are not going back to normal in a good way are health and family. And I'll just talk quickly about them. I think that it's been really interesting to me that the authorities, everywhere I see on the news, a big focus has been shelter at home, right? Social distancing, but go out and get some exercise on a daily basis. And I'm sitting in London, so maybe it's bigger here, but they were very specific about once a day, go for a run, go for a walk, go to the park and walk around. We're not shutting down the royal parks to enable you to get outside and get some exercise, right? From high levels, people are saying, focus a little bit more on your health. It will help you through this process. And well, it's always been, to me, that's the gym culture, things like that have always skewed younger in my mind. But I think we're going to get to a place where at all ages and all levels, people will continue to sort of focus on mental and physical health, walking around, at least getting outside for a little bit each day. I think that's great. I think it's good in a variety of different ways. And you can do it in a lot of different ways, right? Like I know during the last 8 weeks that we've been home, I do some yoga in the morning and I've been doing a workout in the afternoon, calisthenics workout with my son every afternoon. And it's been great for the two of us. We love it, right? I have a very good friend. I don't know if you've heard this. Have you heard of the JNT philosophy?
No.
So I have a very good friend. He's kind of a health fanatic. And when this first started, he said to me, Dave, your philosophy during this period is JNT. And I was like, JNT, what are you talking about? And he was like, Dave, jail, not Thanksgiving. And I'm like, I'm not sure I understand. He's like, I want you working out during this period like you're in jail and you need to come out stronger and fitter than you've ever been. This is not a moment for you to be sitting on the couch like it's Thanksgiving for the next 6 or 8 weeks. So, I thought it was kind of goofy and funny when he first said it to me. But 8 weeks later, I think about it and I'm like, he was absolutely right. Getting fit and focusing on my health during this period has helped everything go a little bit better. And I think it's important.
Well, I mean, this is clearly a time where we can, you can go one of two ways, right? You're right. You can sit on the couch and be lazy. You can tackle those house projects. I would give myself, I don't know, maybe a B- in that regard. I took on a couple of house projects. I've been marginally productive, but it's also, it's very, very psychologically difficult to wake up in the morning. And, there's a lot of uncertainty for a lot of people. There's a lot of bad news. A lot of people that I know have had, been affected way, way worse than you or I, that have had direct health issues or have lost loved ones. And, to get up and say, all right, you know what, now's the time where I'm going to fix the deck and I'm going to cook a gourmet lunch and I'm going to, write 3 blog posts and record a podcast and whatever else it is that people are working on. Yeah, it is an opportunity to do that when, if I'm in the office, I might not be able to do that. I might not have that freedom and flexibility, but it is so much harder in different senses and in hard to define ways, but it's so much harder to get that energy and ability to go ahead and do it when we're just bombarded with uncertainty about the future and a lot of negative news.
It is. I agree with you. It's really, really difficult. But I think that look, it's important. You can sit and watch the news all day long, and there's a lot of things out of everyone's control right now, right? So I think it's important to try and control the controllables, and that's the way I run a lot of my life. When I think about this moment, and I'm trying to think about it in terms of how do I explain this to my kids, right? I'm here and I'm living with I have three teenagers, 13, 16 and 17, and they're watching life, and they don't know how to react to this, right? So I've spent a lot of time thinking about that, and what I realize is that you can only control certain moments of it, and it's those pieces that you control that you will actually remember, right? So if I look at, I'll give you an example. Like I look at big moments in my life. 9/11, I mentioned it a few times today. I remember exactly where I was and what I did on 9/11. It's a moment that will just be with me forever. It's now 20 years, right? I remember I was sitting on the trading desk when the first plane hit the tower, and my boss, he immediately reacted, even before the second plane, and left the office. He said, "You know what? I got to go home." He lived in Manhattan. We were in Manhattan. I was in 245 Park. He immediately left the office and went home to his family. Like he knew, right? He had some instinctive thing in his head, right? And then, it was like 9 minutes until the second plane hit. I was selling futures as soon as he left the office. I was hedging our books. We had a long portfolio. I was hedging our books. I was in Manhattan, so phone systems went down and things like that. And I happened to have a lot of family around the city at that time. And since I was at Bear Stearns, we had a big trading floor. Our office was in good shape. Everybody left, and I was the only guy on the trading floor that day. And I stayed there because I had good phone service and I could act like an air traffic controller until we were able to find my brother-in-law and make sure that we had some cousins in the city that make sure, and my wife had to get home, make sure everybody was okay. Now, I remember walking out of Bear Stearns. The office was 46th and Park. I walked out of the building at like 3 o'clock that day, and I was literally probably the only guy left in the building, one of the only guys left in Midtown Manhattan. But I walked out of the building, and there was a lone cab sitting in front of the building, and I just like got in. It was just this very, very weird moment, and he drove me up to 91st Street where I lived, and I had to go to the bar around the corner because we had no TV or no air conditioning in my apartment. So the only way to get the news was to be in the bar around the corner. So I went there, and we spent like the next weeks, from there, understanding what was happening, right? Big moments, you sort of remember what happened. I even remember, 2008, the great financial crisis. It was March 16th. I was in my daughter's kindergarten play when Bear Stearns went from 60 to 30, and then the next day it opened at 2, right? These are big moments. You will remember, everybody who's listening and who we talk to, they'll remember in 2030 what they were doing during COVID, right? So it actually gives you an opportunity to control some of the uncontrollables, right? What you do now is something that will be with you for a long time. That's why I think it's important to do some of these things, like, interacting with your family and how you do that, and developing a cadence with your health. And this moment will stick with you. You and I will do a podcast in 10 years. We'll talk about where we were and how we were doing this podcast during the COVID pandemic.
Yeah, it is a pivotal point in our lives, in the world. It is. It's really something. It's really something. It's hard to, for me at least. I've been struggling with trying to lift my head above my own air and take a bigger picture look at the world and everything that's being impacted, just because there's just so much coming at me within my own world in terms of, my family, my business. It's been nonstop. And there is something to be said for going to the office and looking at my coworkers and having, smart people that I trusted that I could bounce ideas off of or bounce situations off of and get other people's takes. And, we're denied that. And the things that we need the most right now are the, camaraderie or to hug people and, the things that we're not allowed to do. And it just makes it that much harder. But, you're right. The ability to focus on that which is in our control and to stay healthy and productive and to accomplish things now that when life gets back to normal and we're all a lot busier is going to be impossible to do is, that's a good reminder of that and the importance of that.
I think there's two things that are going to come out of this. You were talking about what's going to be normal. Are we going to go back to things? I think there's two things which will be good that will come out of this over time, right? And I think it's really important to remember. And I think we will be more conscious of the fact that we are global citizens right now, right? It's not just enough to focus on ourselves through this crisis. And every one of us has our own set of issues and things that we have to deal with. But we really have to think about helping society around the world recover. And that's going to be critical, right? I think there's a lot of talk about like the heroes of this crisis being the medical staff, the food prep people, the delivery people, right? There are millions of people that, you and I can sit here and do a podcast, but there are millions of people that they don't really have the ability to shelter in place during this crisis, right? In order to facilitate the existence of the greater whole. And those people are getting sick at higher rates. They're generally paid less. It's incredibly important, I think, in the new normal that we create, that we use this as a moment of reflection to think about a way forward that we can create better, more equal circumstances to like a broader swath of the population, right? We've done a great job bringing people out of poverty around the world over time. And I think, to me, this highlights that we just need to continue that, right? Building global citizens and building the world. I think the digitization of assets helps that, right? We didn't talk about it, and I don't know if we're going to have time today, but digital dollars and enabling currencies to trade digitally and globally will be a great thing that helps people continue to build what I consider to be the global village, right?
So, Dave, I like to close with this question, which is tell me an obstacle that you've had either in your personal life or your career that you've either found a way to work around or that you persisted through.
I have a lot. It's funny because people don't perceive me as this, right? But I think of myself as an introvert, and I sometimes think of myself as, I don't want to say low self-esteem, but I spend a lot of time making decisions is the way I will phrase it. When I make a decision, I'm confident in it and I move forward. But I really do spend a lot of time on decisions and struggling on my next steps. And I've done well because of it, but I think it's an obstacle. It's one of those things that I'm constantly working on. When I know something and I need to make fast decisions, I can do it. But I think I spend a lot of time on certain decisions that I could spend less time on throughout. And I've been dealing with that on a professional basis for a very long time. I think I can always improve that area of my decision-making process. It's worked out well for me because I end up speaking to a lot of people before I make decisions, and I get a lot of views, and I spend a lot of nights tossing and turning. And then, but when I finally make that decision, I'm good with it. But I think it takes me a long time. It's something I've always. But people look at me, and I think from the outside they think, "Oh, Dave makes immediate decisions. He's always so sure of himself." I don't think that is the actual case. If you knew me inside, it's a funny one, but I think it's hard for people to.
But then once you have that clarity of where the decision is, then you get laser focused on where you're headed.
Yeah, for sure.
I don't know. I think you cheated. That's not an obstacle. That sounds almost like a strength.
I don't know. I'll have to think about it more.
All right, we'll leave it there.
I've had a lot of obstacles. It feels like it's been a hard road, but you look back and I'm in a very thankful place right now, right? We're incredibly lucky right now. We're not sick. We're home. There's so many people I can do things for and help, and there's a lot more things going on than my minor, nothing issues. I work with a friend as an advisor on a project that he runs called the Financial Life Project. It's founded by one of my best friends, this guy Joel Hoffman down in Atlanta. Sorry, he's not in Atlanta. He's in North Carolina. We are educating young people about financial issues, right? So we sit down with youth and we talk to them, and he does most of it, and I'm really a behind the scenes supporter. But he's doing amazing work with these people. He sits down, he explains to them personal finance. And these are the things that I think about all the time, right? There needs to be more education around personal finance and helping people manage their lives, right? Like totally. And the stories that he tells me about the people that have gone through the program and that he's helped, they have obstacles. I'm very lucky, man.
Well, that's a beautiful place to leave it. We'll leave it right there. Dave's books, of course, are the ETF Handbook and the Visual Guide to ETFs. Is that it? Are you popping another one out, or are the two books enough?
It's funny, man. I've got, if you want to use that metaphor, I've got two in the oven right now. twins, but they're very different. One is more broadly personal finance, managing your money, all the stuff we're talking about. And we didn't even get a chance to talk about financial independence, which is a huge interest of mine right now. So there's one focused on that, and there's one also focused on the ETF industry. And my book writing process, just as a quick aside, is very, very funny, right? Like I'm not a great note taker. I'm a mental note taker. And so like both books that I wrote, I would end up with a 1-year contract with Wiley to write the book. And I would spend the first 6 or 8 months tossing it around in my head and turning it over in my head and working everything out in my head with not a thing on paper. And people who know me would be like, don't you have a book to write? And I would be like, yeah, I'm writing it. But it would be like, well, we don't see you doing anything actually, but I am. And then, in 8 to 12 weeks is when I sit down and I crush it and I get everything down into my laptop, right? It just comes out of me after a while. It just forms. In this case, I'm doing it a little differently. I've got a lot of notes on both topics that I'm working on. And we'll see if I can get them into book form and get them out.
Well, when they come out, we'll have you back on the podcast. We'll talk about those books. And how else can people find you and follow you?
You can always get me on Twitter, Abner. You can get me on LinkedIn. You can go to my webpage, dabnercapital.com. You can always get me.
All right. Well, there it is. Thanks again. Thank you for your time. Thank you to the listener for your time and attention. And we'll be back with a new show next week.
It's great to talk to you, Phil. Thanks, man.
Thank you for listening to the Phil Bach Podcast. If you enjoyed the show, please take a moment to drop a review. This show was published for entertainment purposes only and is not investment advice. Please contact a licensed professional before making any investments. Some of the securities discussed on the show may be owned by its participants. Opinions expressed on the show may not reflect those of their employers. Stay hungry and stay foolish.